Hello and welcome to episode 10 of the Gold Goats and Guns podcast. My name is Tom Luongo. It is Sunday, May 28th, 2017. All right, well, we got a lot to talk about because Trump just blew up the G7 and it was glorious. I got a couple other things I want to talk about relative to Gazprom and Iran and gold, silver, and oil. So we'll get right to it. All right, here we go. So, Trump at the G7 really did exactly what I hoped he would do. I mean, in my wildest dreams, I honestly didn't think that he would effectively blow up the G7 over climate change. Part of me just didn't think he was going to go in there with that big that first time. But then again, it's Donald Trump. That's what he does. So, because I've never really believed his stance about being anti-global warming, I guess is the best way to put it, or anthropogenic global warming. Let's not get it. I refuse to say climate change because the climate changes, and climate changing is not a problem. Anthropogenic global warming, i.e. man-made global warming, could be a problem, but it's not because we're humans and we're part of the cycle, and we're part of the cycle of the planet, and it's just the way it is. And when I listen to most people talk about this issue, it's very emotional and it's very much tinged with the idea and with the definition, the fungible definition, a very Marxist, postmodernist way of looking at things, that human beings aren't actually part of the natural system. We've turned man-made into a pejorative. But human beings are part of the natural system of the planet. We're not like frickin' aliens or something. We're just people. But at the end of the day, the Marxists really want us to believe that we're the problem because we have a responsibility to be better and the rest of the animals don't. And it's nonsense. We're just animals. And that's their argument. We're just animals. We're just, bits of protoplasm doing what we do. I'm like, yeah, so on the one hand, you want to make that argument. On the other hand, you want to make the argument for morals and ethics and all this other stuff, and you can't reconcile both of those positions. You can't reconcile your inherent nihilism with your claiming the moral high ground. And anthropogenic global warming is the apotheosis of that bifurcation. It's the apotheosis of that mindset. This is them trying to make the argument that if we don't bow down to a Marxist global order, that we're going to destroy the planet. Now, you can't go much bigger than that because we really can't affect in any way, matter, shape, or form the rest of the universe. The planet is all they've got. That's their last argument. And if global warming, as they promulgated it, based on the idea that CO2 is somehow a poison to the environment, that if they can't make that argument stick with this generation, they're done. Marxism's done. And it's not going to stick. It's actually becoming very obvious that to a lot of people that their arguments are just really poor. And they're poorly thought out and they don't make any sense because we were already supposed to be like underwater in Miami and New York and so many of these other places. It was already supposed to be so much hotter, and it's not. And the data is very clear that there hasn't been any warming of any appreciable amount since 1998. And now that we have the upper atmosphere cooling off significantly, and we've got ice sheets expanding, and we've got all these other markers indicating cooling, the whole thing collapses. The whole narrative collapses in the next 2 to 3 years. So Trump going into the G7 and purposefully pissing off Angela Merkel over this issue, who literally was livid. I mean, it's I don't know if you guys read the article at Zero Hedge on this, but it was great. And for him to go in there and do that is to effectively put her on notice that she's done. No matter what her Democratic mandate comes down the pike in the fall, his Democratic mandate is bigger than hers because she's just Germany and we're the United States. And at the end of the day, that matters. And she's played that game where she's Germany and you're just Greece, or we're Germany and you're just the UK. And that's the argument she's trying to make over Brexit. But we're Germany and we're the EU and we're bigger than you are. Well, the EU is going to frickin' completely collapse in the next 3 to 5 years. The sovereign debt crisis is already here. She's the one creating it. She's the architect of it. And Trump I think at an instinctual level, Trump knows this. And so he's like, look, at the end of the day, you owe us $100 billion or whatever the hell his NATO bill is. You owe us a tremendous amount of money for NATO. You're not going to get away with, using currency arbitrage to sell a bunch of cars here in the United States and other things here in the United States with a weak euro, and ask us to deal with all of your problems through your exported deflation. We're not going to have this happen. We're not going to do this so that you can do that and not pay for your own defense and not pay for so many other things, and then lecture us about being morally superior and bankrupt the rest of Europe in the process and take over all of the assets that are worth anything in countries like Italy, Spain, Greece, Portugal, Ireland, or whatever. We're not going to do this. And you're certainly not going to take what's left of the wealth that's in the United Kingdom as a parting fee for Brexit. It's not going to happen. He's made that abundantly clear. And by taking her down at the G7 and forcing them to issue a statement that they didn't want to issue, by standing the United States apart from this global order, he's doubling down on backing the Brits on Brexit. He's doubling down on the infrastructure for a Mideast peace plan that he put together while he was in Saudi Arabia, Israel, and Palestine. I mean, all these things are connected. He went to Italy to ensure that, and don't kid yourself, he went to Italy to tell Gentilini, I got news for you. If you guys need to leave the Eurozone, do it. We will back you. That was not made, there was no headlines relative to that, but you know that's part of the plan. Trump's plan here is to isolate Merkel. That's what he's doing. On the other side of the pond, on the other side, remember, Merkel's caught between a nationalist in the United States now and a nationalist in Russia. And she needs Russian gas, and she needs the Russian markets desperately. The German economy is only strong here because the euro dropped 30%, and they're the strongest economy within Europe. But they've cut themselves off from an incredibly important market. They're now trying to put up production barriers against another incredibly important market to them. And the German banking system and the European banking system is teetering on the edge of collapse because the enforcement of austerity across the board is killing the European Union. It's killing all of the attendant countries. It's killing most of Germany's exporters. And they don't care that they've bankrupted most of Europe now, and they've sucked up all the wealth. Now they're going to try and create for themselves an international. They're going to try and create for themselves international leverage when everybody else is aligning against them. Okay, Trump's Mideast peace plan is absolute, and Trump and Putin's Mideast peace plan, which I'm absolutely convinced is now on the table. Okay, it's not going to be exactly what I want to see, but it's going to be pretty close. That's going to further isolate the European Union. It's going to further tie them to the Russians. It's going to further tie them to American gas imports because they don't have any other options. They've trashed their nuclear. Germany's trashed their entire nuclear power infrastructure. And, the whole banking system is literally teetering on the edge of collapse. So you've got Catalonian, independence movement in Spain, which could remove like half of Spain's GDP from the EU, from the Eurozone. Do you understand how big that is? Do you understand how big the credit risk then becomes that spreads across Europe? It's bigger than Brexit in that respect. Because the markets have already, the slush fund. Look, I watch capital flows in and out of the Federal Reserve Bank, and how it translates to dollar liquidity on a week-to-week basis. When you look at the Fed's balance sheet report every week, you can see how tightly bound the markets are to they're tightly bound to the slush fund that is excess reserves that the Federal Reserve Bank, that the banks like J.P. Morgan and Citibank and Goldman and all them, their excess reserves are tied to dollar liquidity at this point. They're using that as a slush fund, going in and rating it for 40 to 60 to 120 billion dollars on a weekly basis in order to keep their balance sheets, in order to keep their capital adequacy ratios high enough to not attract any attention. It's a $2.2 trillion slush fund. Okay? And that's what's keeping the price of gold mostly in check. And what we're seeing now is that we may be seeing, actually, I don't have a chart for it today, but I'm waiting another week or two before I want to put this chart up. But we may be seeing a resumption of tightening liquidity as the dollar starts to rise, because the dollar's bottoming here, and this down wave in the dollar is just about done. And I think Trump's actions at the G7 underscore that. Okay, and then we're going to move forward into this next phase over the summer, where we'll see a little bit of we're now 2 weeks away from the FOMC decision. They're absolutely going to raise rates. We got the stock market at an all-time high. We've got yields. We got the dollar has been weak, and we've got low treasury yields. It's absolutely the time to raise rates. I mean, if the Fed was going to ever raise rates, this would be the time, because of all of their mandates, all of their not mandates, but all of their internal mandates that they won't actually admit to, right? Publicly. But this is what they're setting policy based on. They're setting policy based on a rising stock market. They don't want to be blamed for a bubble in stocks by keeping interest rates too low. So they're going to raise rates, which is going to have the bears coming out in, screaming that the stock market's going to crash. Well, no, the stock market's going to correct a little bit, but that's not going to happen. The interest rate differentials here are, as interest rate differentials rise between us and Europe, capital's going to flow out of European bonds, because you can't push bond yields any lower. So as the Fed raises rates, raises the return on U.S. debt, your investors are going to move their money out of European debt, right? Why would you buy Portuguese debt at Portuguese 10 years at 2% when you can buy American 10 years at 3%? That's just the ECB buying, and the ECB is going to have to, the ECB at some point is going to have to, they're either going to have to normalize policy or which is, and to her defense, Merkel is actually saying that. But if he does that, the whole thing collapses. So we talk a lot about the Fed being trapped, but the ECB is more trapped than the Fed is, and and Merkel is too economically illiterate to understand that she and her policy, her desire to avoid German hyperinflation again. This is Martin Armstrong's argument. I'm not sure it's quite right, but we'll throw it out there. That this idea that we have to have austerity in order to in order to go forward, in order to create a sustainable economy. But you can't do that with a strong currency. You can't create austerity and a strong currency at the same time. And that's exactly what she said the other day. That's what she wants. I'm like, well, you're nuts. All right. So at the same time, the U.S., at the same time this is going on, right? The U.S. and I talked about this previously, and I talked about it in an article in FIR about 4 or 5 months ago, and I know I've talked about it in some of the final issues of Resolute Wealth that I worked on, which is Philippine President Rodrigo Duterte's push towards China and Russia and away from the United States. And it's continuing under Trump. He hated Obama, and with good reason. But it's continued under Trump. And while I think he and Trump have a better relationship, he just understands that the United States is not working in the Philippines' best interest in the region by opposing China's claims on the South China Sea and poking, and poking enmity and anxiety in the region militarily and in other ways. He understands it, that he has a real problem, and his focus has been to crack down on the drug trade within the Philippines. And they had the issue the other day where ISIS took over one of the islands of Malawi, I think. And Duterte's then, that happened while Duterte was in Russia, was in Moscow, and because ISIS lives and dies by the drug trade. They've had their oil sales cut off, right? The Russians cut that stuff off in 2015, so they live and die now on their drug trade. And Duterte's drug war policy is absolutely a threat to that, which is why they're striking back and why he went to Putin and got guarantees of advanced weaponry and military support effectively in order for the Philippines to start the war against ISIS at home, because that's what Duterte is fighting, and he understands that. Okay, and he's getting real about the reality. He's gotten real about the South China Sea. He understands. He told Azan, as the sitting president of the Association of Southeast Asian Nations, last month. He said, "Look, it doesn't matter whether China's claims to the South China Sea are right or are right, correct, or otherwise. They're the 800-pound gorilla in the room, and we can't effectively fight them. And the United States can't, by also saying, and then by extension saying, look, the United States is not going to fight for us. They're incapable of doing so." And I bet you that Trump told him that. Okay? So we're going to keep a watch on the Philippines from this point forward. It may be I think there may be a good opportunity. I haven't really looked at the Filipino stock market at all, but there may be an opportunity there at some point. Okay, and then Gazprom. And there was a report I saw this morning before I went, while I was taking some notes for another article, that the Gazprom CEO, Alexei Miller, one of the most powerful men in Russia. Okay, if you don't know Alexei Miller's name, learn it. He's one of the most powerful men in Russia, along with Rosneft CEO Igor Sechin. Okay. Was speaking with the Iranian oil minister on the sidelines of the OPEC meeting this week. They were seen talking together. No details, but they were seen talking together. And understand that the Russians are probably working with the Iranians to allow Iran to bypass the production cap. The Russians will import Iranian oil and then resell it, or import it and crack it and sell their own stuff overseas. That flow will happen that way, and Iran will get food exports from Russia, because they're looking to increase their trade, not just from the Russian perspective of selling them nuclear power plants and whatnot, and arms sales and air defense systems like the S-300 and whatnot. It's more than that. The Russia's now the world's biggest exporter of wheat. They're also the world's largest exporter of oil. So, natural gas prices look strong here, FYI. And the Yamal LNG, the massive Yamal LNG field is producing like gangbusters, and that whole region of Arctic gas is impressive, and that's going to feed the Nord Stream expansion. And the EU is powerless at this point to stop the Nord Stream expansion without just draconian, just coming up without changing the freaking rules and changing the laws like they did with South Stream. But Nord Stream expansion is already into production. It's already happening. It's mid 2017. It's due to come online within 2 years. I got news for you. It's going to happen. The Poles will complain about it. The Baltics will complain about it, but there's nothing they can do about it at this point. And Poland's not getting a sympathetic ear from Angela Merkel right now, because Angela Merkel needs Russian gas in order to keep Germany's economy afloat. She's not going to sacrifice German growth for Poland's. It's not going to happen. And this just tells you that at the end of the day, and remember, Poland's been our attack dog within the EU to do our bidding within the EU. And I think Merkel does believe that she needs to carve a new image for herself as no longer being a U.S. lackey, a U.S. quisling. And her and Trump's animosity is a great cover for that. And it's going to play well into the German people for her. She's going to do very well in September's elections, but she's going to do very well in an election that's going to run right smack dab into the sovereign debt crisis that's unfolding. Okay. And then last note, I don't have any chart about this or anything else, but I did publish an article for my premium subscribers at Seeking Alpha as a pre-look at Golar LNG Partners earnings report, which is on the 31st, the last day of the month. And Golar is one of my favorite stocks in the world. I absolutely adore this company. And, I'm looking forward to the earnings report. The stock's been under pressure recently as we come into earnings, but it's trading at a stupidly low debt to EBITDA to its EBITDA to debt ratio is very, very low, and its debt to EBITDA ratio is very, very low. It's a master limited partnership that moves LNG around, and its coverage ratio is very high. And if you don't know anything about investing in master limited partnerships, those are the only two metrics that really matter. Debt to EBITDA and coverage ratio. And if those two things are good and you can see a path for growth, then that means the dividend payouts are substantial and safe. And that means the substantial dividend payouts are safe. And that's one of my favorite things about GMLP. So I have a closer look at that up on my premium service over Seeking Alpha. And you should consider subscribing there if you want to get the inside dirt on really good companies to hold over the next 5 years. I'll be filling that portfolio out over time. I'm not sure that right now is exactly the right time to buy, but the trade alert will go out when I'm happy with what I see in the stock. So we'll see how the things play out with the earnings report on Wednesday. Yeah, Wednesday. All right, so let's get to the charts and I'll get you out of here. All right, so gold. We had a strong week in gold, and looking back over the H.4.1 report this week and seeing how the slush fund was manipulated, I'm not surprised. I actually am surprised. Sorry, because as of Wednesday, there was gold was under pressure due to tightening liquidity, but obviously that got lifted on Friday morning, and gold was able to pop above last week's high, which it hadn't been able to do. So earlier in the week. So we got this very, very strong close here where we got a close here above this last week's high, which gives us a very high probability of being able to break through this high that I've this high here that I've outlined in multiple podcasts in the past, which is 1272.50. If we're going to get at least a break it this week, I'm almost positive that to get gold to move up $6, above the open this week is trivial. It'll happen 90% of the time. Whether it closes above that is a different story, right? But it's absolutely, gold is in a position to move higher here, and silver supporting it, and I'll show you that chart in just a minute. And so you're probably looking at least a move up into the 1280-85 range, and then possibly even a move back towards 1293 early into June, but we'll have to see what happens. The pattern has been recently that gold strong into the close of the month is usually met with weakness during the first week of the month. And the reason for that is that if there's significant amounts of people standing for delivery during that first week on the COMEX, they'll push the price of gold down in order to get those people to settle in cash for as little as possible. Because that's actually what happens on a monthly basis. Same thing happens in silver. So do we have and it's an even month, so it will be a gold delivery month, odd months are silver delivery months, all right? So let's look at silver, where the situation is a little bit more complex, but at least I have the numbers up here for you. So remember, I was talking about the 1729 level, which was very important, and we did close above that this week, so that's also very strong. And so silver's picture technically is slightly better than gold's. Remember, gold has not broken through this high yet, hasn't even approached it yet, whereas silver has already closed above the high from the same point in time. So that brings 1805 into view for potentially for this week. We'll see what happens. A move to 1805 would be a stretch, right? It would be a stretch. Silver doesn't normally move that far in a week, but if it does, if it moves 60, 70 cents, that would be a big deal. I will say that, moving above 1750, and if we get follow-through action early in the week, we can get even more short covering, and that could take us all the way to 18. But then next week's close will tell us a lot about what's going on in silver. But silver looks pretty good here. So if you've got silver stocks, don't sell them into this. You've got time here. All right. Same thing in gold. I think you got a little bit of time. But gold needs to confirm, right, this week. Very early this week, gold needs to break above 1272.50, preferably on Tuesday or Monday. I mean, the American markets are closed on Monday, but there will be there's the European markets will be open until 11 o'clock our time, and then the markets will pretty much be closed until the Sydney open in the evening at 7 o'clock that evening. So, but yeah, coming into Tuesday, I'd like to see gold push above 1272. If it doesn't, we'll see. All right, and then same thing with silver. Silver's got follow through here, and silver would be strong. Now the question is, and this is the big problem, is that, and I want to go over this chart in a little bit more detail because the silver and gold situation is pretty straightforward, but I haven't put up a detailed chart. I've just talked around Brent crude and oil. So looking at this chart, so we have a nice big 6-month uptrend here in oil. A couple of, it took its time getting there, and this is a very orderly chart. This would not normally, I would not normally look at this as a 2-bar, as any kind of reversal signal, because you've got, here's your last up bar. These are 2 down bars, and they don't break the low here at 51.51. We don't get a close below that, so that this isn't technically a 2-bar reversal. But here's the thing: we did get a break to the upside here, and this bar is an inside bar, right, where we didn't break either the previous high or the previous low, and that's usually indicative of a trend change, especially in oil. It doesn't happen all that often. I went back and looked at like 6 years worth of data, and it doesn't happen often at all. It happens less than 5% of the time, and because of that, you have to respect this as your trend change marker. That these 2 bars together are oil running out of steam. We get a lower high within, what is that? That would be May, April. This is March, February. So in February, we got very low volatility and very low price movement, and then we get a breakdown below that in the very next month, and we break down below this low with a close at 52.83. That to me is a reversal, and this now is a 5-month downtrend, right? Or at least a 4-month downtrend, and now we've got this big, huge down bar here. This could be we could be seeing the beginnings of a spike bottom in oil and a move back higher, but I'm not convinced of that. I really do think that part of the problem here is that oil is overvalued, and this trend is likely to continue. We may get a little bit of a bounce, but I think it's going to fall off. I just don't see that $57 on Brent is coming anytime soon. The important level for oil before the end of the month is this 51.51 level. We have not seen a close below that, or even just 51.72. Just closing below the close from last month would be good. I mean, obviously a move down into below $51 would be, between now and the end of the month, would be strong. Now the crude oil COMEX contract expired on Friday, so there'll be 2 trading days before the end of the month to see what happens. I would not be surprised to see oil push back down. So, okay, before the end of the month. So we'll see what happens there. Yeah, I just happen to be bearish on oil here, and if I'm bearish on oil, then I'm wondering I'm wondering how much energy silver has to push higher, and then I'm wondering how much energy gold has to push higher, because what that's telling you is that the dollar price of all of these assets is going to weaken, and if we've got a strengthening dollar, then they're going to continue to weaken, and that's just the way it is. All right, so that's what I've got. I probably went a little long today, but I think it's important. Some of the things we had happen this weekend were incredibly important, and Trump's performance at the G7 was incredibly important. And then what's happening in the oil space and the strategic commodity space at this point is also fascinating. And I think that a lot of people just don't understand how much oil is actually out there right now relative to demand. And I'm not believing a lot of the inventory draws data that I'm seeing. And for a variety of reasons, and I'll explain that in a future podcast. I've already gone too long this morning. So that's where we are. Let's watch to see if gold can break through 1272.40 on Tuesday. Let's see if we can get a significant move next week in silver, and let's see if oil breaks down $1 or $1.50 between now and Wednesday's close. Because if so, that would be significant. All right, you guys take care. You have a great holiday tomorrow, and keep your stick on the ice.